Let's take it across to Pankaj. And, new business premiums for life insurance companies have grown a solid 43.43% in the month of May itself, providing an impetus for the already booming insurance sector. Pankaj is waiting by with all the updates. And Pankaj, what is causing this buzz in the insurance space?
Aisha, let me first tell you what stocks have done. So since Feb, if I just look at the movement, HDFC Life is up 25%, SBI Life is up about 20%, ICICI Prudential is up about 16%, Max Life is up close, Max Financial Services that is up close to about 8%. Insurance as a sector has done well. There are very few listed players, but now it's getting bigger with every passing year. And when we look at and when I talk to a lot of people, the sense is that this is one space in the financial institution which is growing and growing very fast. And that's the data which also is, the May data which came in also suffices that. The new insurance premium grew by about 43%. Various big players like HDFC, Max, LIC, all of them have done particularly well. Most of the investors, most of the people who write about these companies continue to mention that the penetration levels are low. These companies have sufficient capital for growth and these companies are targeting towards growth. So all of these 3-4 things are, coming into favor of the insurance companies, and that's why they are probably in the sweet spot. And every time you see a decline, there seems to be some delivery-based buying into these names, whether you talk about HDFC Life, whether you talk about Max, whether you talk about ICICI.
Max is of course the promoter holding which is very largely pledged. I mean, that's not going to affect the way how company does the business, and professional management is independent of that. But yes, a large amount of promoter holding is pledged, something which in a tough market can always raise concerns. I'll not focus on that, but I want to focus on the growth, what new premium, premium category has seen as per the latest IRDAI numbers. Mr. V. Viswanand joins us now to walk us through what is the reason why the protection business or the term business has seen such a phenomenal growth as per the latest data. Good morning. Thank you for joining us. So what is your sense? I mean, why is there such a bumper growth in the numbers which IRDA released? We were analyzing those numbers last week and those numbers are looking very, very healthy. Is there something which is a technical aberration and these numbers are looking good, or this is the reality of the industry and this is the reality of the sector which is right now glowing and blooming?
Good morning. Well, the numbers are correct as you see them. Having been in this sector for a little over 18 years, I can tell you this looks like a resurgence or a second sunrise as far as the sector is concerned. The adjusted or the single premium adjusted premium growth is for the private sector is close to 23%, and Max Life has been outperforming as well at 25% growth. I'm talking about April and May. And this is coming on the back of 3 years of successive growth of 20%, 22%, and last year 9%. And these are all, 12%. And these are all figures which are there. So the good news appears to be that the formalization of financial savings, which began several years ago with demonetization and then GST, seems to have caught speed. The financial savings have actually overtaken physical savings as per the RBI data as well. Financial savings of domestic household Indians is now 52%, while physical savings such as real estate and gold, the share has come down to 48%, and these are large movements in a country like India. Along with that, the rising affluence especially of urban Indians seems to have driven a trend towards buying protection. And even last year, the whole of last year, we had nearly 1 out of 4 policies being pure protection policies as a company like Max Life. Already in April and May, this ratio seems to be trending towards 1 out of 3 policies. Besides this, the rising affluence and even longevity increases that one is experiencing in India is driving a trend towards retirement. So the risk of living too short and the risk of living too long, both seems to be playing out, giving huge tailwinds to the life insurance sector.
Okay, but Viswanand, if I just map the industry numbers, from among the major private players, Max Life actually has reported the lowest growth numbers amongst its peers. What would you attribute that to? And more importantly, for FY20, what is the kind of guidance and internal targets that you may have set for yourself?
We've been following a strategy of 25, 25, 25. That's our vision And this is really the three big numbers which look at the quantity as well as quality of business. The first 25 stands for the value of new business growth. The second 25 stands for the new business margin or the profitability. And the third stands for the return on embedded value, or how strong your in-force book is growing. So that's being our focus. Last year, we closed with around 30, 22, 22. And the year before, we were at 20, 20, 20. So we are on track as far as that is concerned. For the month of April and May, if you look at it combined on a YTD basis, Max Life's growth on top line is 25% on an adjusted premium basis. And we are well on track to our mission.
Your exposure to ULIPs, continued to inch up slightly. Let's talk about that. What you see as a future over there, and how you really see your product mix shaping up over the next couple of years.
That's an interesting question. I find that the trend both in the private sector as well as Max Life, the growth trend seems to be sustainable. And why do I say that? If you look at what is fueling this growth, it is not just an increase in ticket size, which is usually driven by when the market shifts towards unit-linked plans. This time, the growth has been secular. It's on number of policies as well as ticket size. 50% of the growth in the sector and for Max Life has been on account of number of policies increase, which I guess is driven by protection, and 50% is through ticket size increase. And this ticket size is not just unit linked, it's also interesting guaranteed non-participating traditional plans which are being purchased by Indians, largely for income protection with significant guarantees built in there. So the market is opening up, so it's not just a unit linked driven market. For instance, Max Life, even last year, we had a very balanced product portfolio. We actually allow customers to choose the breakup between unit linked, non-participating, traditional, and participating seems to be like 40, 20, 40. That's how the portfolio is broken up in value terms.
The concern from a market standpoint is that the promoter holding is pledged. Now the professional management would come and say, look, that's promoter. We are professionals and the company is in good shape. Should we start? I've actually answered the question, but I want to encourage your thoughts on this.
Well, that's right. You have answered the question. The promoters are seized of the issue and that will be handled in due course and there is a game plan around that.
Game plan, if I may ask?
I'm sorry?
What is the game plan, if I may ask? Because if you're using the word game plan, I'm sure that is something you would like to share.
Well, this is a shareholder matter, so I would leave it rather to the promoters and the shareholders to execute their game plan. I'm not at liberty to share that at this moment in time.
When you talk about your 25-25-25 vision, can you tell me that in how many years you would be able to achieve your 25-25 vision? Will it be 2025 or will it be before that?
We are looking at reaching this mission before that. In fact, I can go back 3 years when we declared our 20-20-20 mission along these three parameters, which are quantitative and qualitative growth aspects. And we hope to reach that by the year FY20. Having said that, we achieved it actually 2 years in advance in FY18 itself. And all the tailwinds that the sector has been benefiting from, as well as our growth on our proprietary channels such as agency and our strong partnership relationships have helped us get there. We expect that the 25-25-25 strategy will be up in action and realized by the year FY22, if not latest by FY23.
I want to ask you something very simple, and this is just for the benefit of our viewers and for your shareholders perhaps. Your relationship with Axis Bank, can you just share more details on that? I am aware of your relationship there, but this is just for the benefit of our viewers. What is your transactional relationship with them? How much of total business is coming through that channel? And you know, the buzz keeps on coming again and again that Yes Bank is looking at acquiring an insurance company, and it could be Max.
Okay. So I will not comment on market speculations, but I will share with you facts. Like you said, many viewers might be interested in knowing what is the depth and the span of our relationship with Axis, and for that matter with Yes Bank. At a high level, close to 65% of our business comes in from our bank partners, from our bank assurance channel. On an average, about 50% of our top line business comes from Axis Bank. We've had the privilege of having a relationship with Axis Bank for now 9 long years. We'll soon be entering our 10th year of our partnership. With Yes Bank, that is even longer. We would be in our 13th year of partnership with Yes Bank. In Axis Bank, we have written a total of over 10,000 crores of new business premium, with the quality of business as well improving year on year as well, which means customer retention, our overall claims paid ratios, which as of FY18, we happen to be on top of the league tables with 98.26 claims paid ratio. And the last year, as you would notice in our public disclosures, that figure has further improved to 98.74%. So both in terms of health of the relationship, the quantity of business being written, and the quality of the book seems to be good. An interesting fact also is that close to 1/4 of the new business that we write, even through our bank assurance channels, is actually being cross-sold to existing policyholders of Max Life. So deepening of the relationships, having true customer advocates, and growing through customers seems to be a strategy that's working well for us in our partnerships as well.
Thank you for joining us this morning, and sharing an in-depth look at some of the trends that we're observing currently, as well as the outlook for Max.